Good morning, everyone, and welcome to another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital Management in partnership with Frontier Africa Report. Today is Thursday, the 3rd of June, and on our agenda for today, we'll be having a rundown of the local equity and fixed income markets, as well as some headlines from our partners at Frontier Africa Report. Before we begin, I'd like to inform everyone that this meeting is being recorded and will be shared with third parties. And we're also broadcasting live on Facebook. The presentation is scheduled to hold for 30 minutes. That includes Q&A. However, if due to the time constraints, we're unable to answer all of the questions we may have, do feel free to email us at research@vetiva.com, and we will get back to you as quickly as possible. So today we'll start off with our fixed income and currency trader, Omorige. Good morning, Omorige.
Good morning, everybody. I'll be taking a recap of the Nigerian fixed income activities for yesterday. I'll start with the money market. The money market continued its run in the positive region yesterday as it opened 147 billion positive. Despite the opening figures recorded yesterday, interbank tightened by over 200 basis points to trade around 14% levels from the 12% levels recorded on Tuesday. This uptick in rate was by the increased demand for funds yesterday on the back of the CRR debits that happened during the closing hours of Tuesday's trading session. We expect the money market to trade at lower levels today in the absence of any significant funding in the market. Moving on to the FS market, the parallel market remains stable to trade at 498 Naira to $1. The earning window traded at a high of 420.47 Naira to $1, closing at 411.06 Naira to $1. That's about 94 kobo appreciation from where it closed on Tuesday. The earning industry turnover increased significantly to close at $264 million yesterday from the $96.91 million recorded on Tuesday. Brent crude oil grew by 1.57% yesterday to close at $71.35 per barrel, while the Nigeria External Reserve dropped by about $9.96 million on Tuesday to stand at $34.22 billion. We believe the Naira will continue to hover around these levels in the interim, in the absence of any significant inflow of FX into the system. Moving on to the Nigerian Treasury Bills market, the T-Bills market recorded another lukewarm trading session yesterday on the back of lack of buyer interest across the curve, despite the offers shown on the OMO papers from the February OMO maturities to the March OMO maturities. Few trades were dead at that end. The lack of significant interest in the NTB spectrum spurred an uptick in rates as offers on the special NTB, that's the August 30th, 2021, improved by over 100 basis points to trade around 8% levels. Offers on the newly issued one-year paper, the May 26, 2022, improved slightly to trade around 9.35% levels. However, bids on that end were far from the offer levels as they settled around 9.5%, just 50 basis points from where it closed at the last auction. That's 9.65%. Overall, the lack of demand witnessed in the NTB space as well as the OMO space led to few trades being consummated across both segments. We expect the T-Bills market to trade on a quiet note today as the lack of buyer interest persists, and also coupled with the extremely tight system liquidity. I'll conclude with the Nigerian bonds market. The bonds market was awash with a lot of activities yesterday, but with just few trades to show for it. The bullish run continued in the bonds market yesterday, and this was largely driven by the lack of corresponding offers to the numerous bids seen across the benchmark curve. The market resumed to intense demand on the 2023, 2026, 2029, 2035, 2045, and the 2050 maturity However, despite the intense demand seen on those papers, few trades were consummated across the benchmark curve as there was paucity of offers in the market. Bids on the 2045 and the 2050 maturities were around 14% levels, while the only visible offers on those papers were around 13.8% levels. Bids on the 2023 maturity were also around 11.75% levels, but there were no visible offers on that end. We expect the current sentiment in the bonds market to persist in the absence of offers across the benchmark curve. That concludes it for fixed income. Thank you very much.
Thank you, Omorigi. Next, we'll hear from global equities trader, Sean Osama. Good morning, Sean.
Good morning, Joshua, and good morning, everyone. So we'll be reviewing performance of some markets in West Africa, specifically the BRVM and the Ghana Stock Exchange, as well as the Nigerian Stock Exchange, as well as outlook for those markets in today's session. So we start off in BRVM, where the composite index closed down by 62 basis points, which is on the back of the losses we saw in some of the mid-cap names like NSIA Bank, as well as Southern Cote d'Ivoire. Gainers in the session were led by SAFCA as well as CFAO Cote d'Ivoire, but these weren't sufficient to move the market to a positive close, as these were just some of the small cap counters in that market. We saw significant improvement in the activity level for the day, though the market breadth still ended negative, as we saw 20 losers ahead of just the 15 gainers in that session. So far this week in the BRVM, the sentiment in the market has been somewhat negative, as our usual large cap stocks that normally support the market have been quiet in terms of the return. Specifically looking at a name like Nestle, we've seen it gain over 200% in the last 4 weeks, and about 900% year to date, which is on the back of the impressive full year and Q1 numbers that it has released. So if we're seeing gains in such names, obviously they will be able to support the market. So if the likes of Nestle return to significant daily gain, we should see the index close higher in today's session. So just then moving to Ghana, the benchmark index in that market recorded a significant improvement with a 4.85% gain in yesterday's session, which is quite significant. This was on the back of a 10% gain in the share price of MTN Ghana, after seeing over 2 million shares of that company traded at that level. So it moved the price from 1 CD to 1 CD 10 pesos in yesterday's session. Incidentally, that was the only gainer in the session. That talking about MTN Ghana. Turnover also improved on the back of that trade that we saw in MTN. Outside of these trade, the market was quiet, just like we've seen since the beginning of the week. We know the impact of MTN on the composite index. It's mostly determined the direction of the market. Looking at today, so outlook for today is we expect another quiet session, save for any large trade in any of the bellwethers. Also, so for investors that are looking at some level of exposure in any of these two markets, which is the BRVM and the Ghana Stock Exchange, kindly reach out to us via email or at dealing@vetiva.com, And also you can reach out to our sales team at sales@vetiva.com, and then we'll be happy to assist. So lastly, I'm moving to Lagos. The Nigeria All Share Index ended the session on a positive note following yesterday's downward close. Yet following the previous day's downward close, the 18 basis point gain was largely driven by Dansem, which gained 141 basis points in that session. And we also saw another 44 basis point gain in Zenith as well to move the market upward. Unilever and UBA also were some of the other gainers in that session. We saw a few crosses in names like Seplat as well as Dangote Cement. So with this gain, the year-to-date return, though still in the negative, but improved to negative 4.44%. Sectoral performances, if we look at that, those were mixed. We saw three gainers and two losers in the session, even as the daily turnover dropped by about 50% to 1.3 billion in a very quiet session. I think we've mentioned this in the past 1 or 2 weeks. We've seen turnover greatly affected. We're not seeing as much activity in the Nigerian market. Investors, we note that investors are beginning to speak and to make decision based on the security situation that looks to be heightening in some part of the country. And we know this is, like we've mentioned, I think sometime in one of the sessions this week, that we know this is negative to the market, but we believe the government will continue to do its best to prevent any breakdown of law. So going into today, despite the positive market close, that was yesterday's market close, activity level and sentiment appears to favor the bears. We therefore anticipate a slightly negative session today with weak turnover also expected. Thank you. That will be all for the equities market.
Thank you very much, Sean. Before we move on, I have a question here that is directed towards equities, and this is a technical question, so I'll ask you. So, is it the right time to invest significantly in Zenith, or should one wait to see if the price will go down over the course of the year?
Okay, thank you for that question. I think you generally speaking to names like Zenith or any of the other tier one banking names. For now, we've seen one thing. If you're looking at what those companies will do in terms of half year, we've seen their come up a bit. We've seen rates improve significantly, so we expect income from trading to actually improve, right? Then we also expect, now that they've started giving out loans. That has also improved. So we expect income from these income line to improve. So with those two income lines improving, we expect Zenith Bank to have a better than expected H1 result. However, we're looking at the general market sentiment, and now investors are perceiving the market. The stocks you might have a very good company, or you might think, oh, this company should actually perform way better, like Zenith. But because of the sentiment surrounding the market at the moment, we've seen a little bit of negative sentiment of, like I mentioned, in terms of in terms of the security situation, as well as where the other alternative alternative market, which is fixed income. Investors are moving away slightly, and we have also seen some level of challenge in the general market. So what I just think is it a good time to buy? I think you can continue to buy gradually. So cherry pick, buy some at this price. Watch out for where market direction is. If you see market come down a bit lower, you can also pick some more. But generally, what we have seen is a few investors are selling while others are still are continuing to pick up at that 23 level. 23 has been like we've seen it trade at that level for a bit now in the last say 2 to 3 weeks. So uh, 23 levels, I think you can pick up some. Watch the market, watch market sentiment, and then you can pick some more. But 23, because for most of the analysts, if you look at it, the outlook for the target price for Zenith is still around 28 to between 28 and 30. So buying at 23, obviously it's a good price. It's a good price for us, but we just also advise to buy gradually and cherry pick into your position. Thank you.
Thank you very much, Sean. Next, we'll hear from our partners at Frontier Africa. Here we have Temple. Good morning, Temple.
Good morning. Good morning, everyone. The IMF has now agreed to offer $1 billion bailouts to Uganda. It's one fund that they've also applied for in recent time, and that we understand is like the second bailout funds to an Africa. It's the second bailout fund to an African country in the last 4 days or thereabout. Because last week, yes, the Democratic Republic of Congo actually secured some $1.5 billion from the IMF as well. But we understand that this $1 billion bailout to Uganda needs some approval from the IMF. From the executive management and the board of the IMF. It's basically something that they're waiting for at this point. KenGen, which is the power generating company in Kenya, has announced that it has commenced the drilling of some geothermal well in Ethiopia. They're expected to drill as far as 3,000 meters. They've done like 29 meters or thereabouts so far. And of course, that project is being financed by the World Bank as well. They're going to do some 8 wells in total because I think it said that Kenya is actually one of the geothermal strongest countries in terms of geothermal engineering, as it were, right now. Western part of Africa, Ghana specifically, we've got Aker Energy of Norway announcing the sale of some 50% stake in Ghana's deepwater offshore block. And this is due to the constraints that the COVID-19 has brought on the project itself, specifically the Pecan Development Project, which is part of the deepwater offshore block thing. The Norwegian company says it's finding it difficult to raise funding for that particular project. So they're going to be selling 50% of their stake to some folks there. And of course, there's a report coming out of coming from Standard Bank predicting that Africa's central banks are likely to hold rates till the third quarter of 2022. And that is basically hinged on the fact that there's been higher money market yields in recent times. Nigeria, they explained that Nigeria's got a bit of increase in yield at the short end of the curve. In Tanzania, it's been steady lately. Yields have been steady across the curves. And of course, that's despite the dovish monetary policies. In Zambia, where the MPC has surprisingly raised their MPR rather by 50 basis points, they do expect that to continue to increase. Mozambique and Zimbabwe have also tightened lately. They are not so positive about that, but for other markets like Ghana, the DRC, and a couple of other countries, they do expect them to remain a little bit dovish or hold rates at whatever levels they are at the moment. And in northern part of Africa, Morocco's auto exports was up 62% in 4 months. And of course, that's details contained in the merchandise trade reports that was released yesterday by the statistics agency in that country. The trade deficit, we understand, has shrunk by some 4.2% to 62.7 billion dirhams, and remittances are also growing, 28.8 billion dirhams in the month of April. For now, those are the headlines we have to share with you this morning. Thank you for listening.
Thank you very much, Sample. We've now reached the Q&A portion of the meeting. If you have any other questions that you'd like to ask, you can raise your hand and you'll be allowed to speak. Or if you prefer, you could leave a question in the Q&A box or the chat box. Or if you are joining us from Facebook, you can leave a comment and we will answer your question. All right, it appears we have no more questions today, which means we have reached the end of the meeting. Okay, I see Tumi has a hand up. Please go ahead and ask your question.
Hi, good morning. Can you hear me?
Yes, we can hear you.
Awesome. Good morning. Thank you for this session and for taking my question. So I wanted to find out what's your take on rates or yield trajectory in the month of June, seeing how we are expecting very, very light maturities hitting the system in this month. So do you think rates are going to trend higher still, or do you feel we've reached a resistance at the 14% levels where the long dated bonds are currently trading at? So what's your take for the month of June in that regard, considering the liquidities that we're expecting, which isn't much this month? Thank you.
Thank you very much for that question. Omar, go ahead, please.
Okay, good morning. Thank you very much for your question, Tony. Like you rightly said, the maturity profile for June is not very significant. Like we have seen in the past couple of trading sessions in the secondary market, we have seen rates begin to moderate in the secondary market because of the lack of offers in the secondary market. So, and also we have not really seen a lot of buying interest in the TB space, though that has played out in the bonds market because a lot of people have come into the market to cover their short positions that they created prior to this trading sessions. So we have seen that significantly push rate lower. So our expectation for rates in the month of June basically is that we expect this moderation in rates. We expect this moderation in rates to continue until the upper month, which is July. We are going to have a lot of maturities in July. And we think that will also significantly drive rates in an upward trajectory also. Thank you. I hope that answers your question.
Yeah, it does. Thank you. Although my opinion was actually the reverse of what he said, but I think that still makes sense because I was thinking if we have very light maturity in the month of June, right, then if some of the institutions are forced to, let's say banks, for example, wanted to, this is just the way I'm thinking about it, they wanted to raise liquidity, that might push them to sell in order to raise liquidity. Or if DMO wants to come and raise bonds in the market, all of that things held constant, they might have to offer higher yields, right, to be able to raise something significant, seeing as liquidity in the system is very, very low. And then when we enter into July, all things held constant again, which basically means the CBN governor not mopping every single thing that comes through, because I think it's close to $1 trillion or thereabout in liquidity in the month of July, right? So if CBN government doesn't mop everything through special CRR debits, I was thinking that glut is going to cause some yields to trend lower. So that's the way how, I was thinking about it. But it's interesting, the other perspective I'm just getting. But yeah, that answers my question. Thank you very much.
So sorry if I may just jump in. Thank you, Timmy, for the question again. And I think the later part it meant to say yields will dip in July. So the view we are trading in the market currently is against July maturities. I believe there are a lot of people coming in to cover their short positions, and so that is pushing yields, slightly lower. And there's this FOMO that's also going on in the market. We've seen 14, and the 14 seems to have disappeared to 13.8 levels across the mid and the long buckets. So people are just trying to see, can I still lift some of this, which happens. And now the reset for the market for the month of June will be seeing the NTB calendar for the next quarter, and also seeing what DMO does at the next NTB auction next week, and then what they do at the bond auction in June. But basically, people see, you're correct, almost $1 trillion coming in July, and you're just trying to go in, cover your shorts, stay long a bit, because definitely that will move market downwards. Because some of these funds will definitely have to go back into bonds, and some of these funds, even though some will be retained at the lower end of the money market space, and that will move the bonds market. So in June, we believe this moderation will persist, but the resistance, you're correct, it will be there. We've seen it, we've seen rates push down. And what we expect again will be that at some point we'll maintain, because everybody will come to the point that these rates are not, sustainable for me to start lifting. So it will be people covering short positions that left. So again, the moderation, correctly said, we'll see that into June, not because of stronger liquidity profile, because we don't have so much liquidity like you rightly said, but because again, people are trying to cover their short positions and the fear of missing out from the strong yields we've seen in the last couple of months for June. But then we'll also see a strong auction going into June bond auction, because people have strong maturities. Bonds alone is about over 500 billion. And then we have coupons coming in. Total liquidity that's coming to the system will be about 800 billion. Expectedly, CBN will try to mop as much as they can up, but some will go into the market. So we'll see the impact of July liquidity from the end of June or towards end of June again, and that would flow into July, when we'll see bond yields again reverse moderately. Going after that, government borrowing plan will then start to determine how high up will go in the month of August again, but we'll see some correction again in August. That's what we believe. I hope that covers it for you again. Thank you.
Thank you so much.
Thank you to Davo and Omorige for your answer. Thank you for your question. If there are no more questions, we have now reached the end of today's meeting. Thank you for joining us. We hope that you'll join us again tomorrow for our last edition of the week. We hope that you have a good day. And thank you very much.